The GIC Re witnessed brisk buying in trade as it emerged as one of the top gainers on the Nifty 500 index. The state-owned insurer has been grabbing headlines in the aftermath of the Hindenburg report on Adani Group amid concerns over exposure to the conglomerate. However, Minister of State for Finance Bhagwat Karad has clarified that the total exposure of the state-run general insurers, including New India Assurance Company, Oriental Insurance, United India Assurance, National Insurance and General Insurance total exposure is at 347 crore rupees, which is 0.14% of the total AUM of all the 5 companies. That has managed to allay investor concerns to an extent. This aside, what are the other factors working in favor of the stock? Well, a strong quarterly performance saw the insurer swing to a profit of 1,200 crore rupees on a year-on-year basis. Remember, it had reported a loss of 28 crores in the same quarter last year. Its underwriting loss too came down massively to 1,500 crore rupees or thereabouts, from 2,300 crores compared to the same period last year. Now, this provided a fillip to its net income, which was also buoyed by a healthy jump in investment income. What could also be working in favor of the stock is its diversified risk portfolio that includes property, health, motor, agriculture, marine, engineering, aviation and liability. Moreover, the general insurance business in India has a penetration level of under 1%, thus indicating great potential. Well, looking at the valuations, its price to earnings ratio stands at 4.3, which is lesser than the sector PE of 23.1. Now, the company is virtually debt-free as its debt-to-equity ratio is 0. Meanwhile, foreign investors have increased their holding in the company in the December quarter. That too at a time when we have witnessed steady FII outflows from the Indian markets for months at a stretch. If you look at the stock performance, well, over the last year, it has galloped nearly 15% and outperformed its sector by 1.6%. But on a YTD basis, it has seen losses to the tune of 18%. But one risk factor to keep in mind would be its return on equity. The ROE for the last financial year was less than 10%. This indicates an inefficient use of shareholders' capital to generate profits. But post the clarification on the exposure to Adani Group and its steady performance in the quarter gone by, it has managed to rekindle investor interest and could continue to do so.
It's rare to find news and insights tailor-made for you. For clutter-free content and value-added insights, India's #1 financial news destination, Moneycontrol brings you Moneycontrol Pro, an ad-free premium service that offers its subscribers curated market data, feasible investment solutions, exclusive noise-free information, independent equity analysis, and sharp opinion. Moneycontrol Pro, India's fastest growing subscription service, has offered valuable content to subscribers in sync with their interests and demands. We are now a family of over 500,000 active subscribers, consistently helping our users on their wealth creation journey and enriching their awareness around business and finance. We are grateful for the continued support of our loyal readers and subscribers for making Moneycontrol Pro an undisputed leader in its category. And if you are yet to experience the rich offerings, subscribe today for a seamless, uninterrupted access to a gamut of business and financial information. Be a pro with Moneycontrol Pro.